Hello, everyone in the Urvin community. Today, we're going to take a look at the market. Another day, another dollar, and another tick down in tech. I want to walk away at the end of the stream today with kind of two clear data points. The first data point is understanding where the market is currently showing pockets of strength. And then the second data point is where are we seeing weakness? Because myself, from a trading lens, this is how I identify opportunities. It's by looking for different kinds of divergences, things that look interesting to me. And when the markets start behaving like this, the kind of cool part about it is that there's a million things to look at and there's a ton of opportunity. So let's talk about said opportunities. You've seen this screen before. It's kind of noisy, but I use it as like a general dashboard. It lets me look at a lot of things in one spot to get an idea of what's going on across the market and make that exact comparison that I was just mentioning. And right now, if we look across the indices, which are the first three in the top left, you have SPY, Qs, and IWM. On days like today, the very first thing that I like to do is understand the dynamic between these. Where are the leaders? Where are the laggards? And is there something we can derive from in between? So here's the story. Right now across SPY and Qs, they're both down about the same, although Qs definitely started from a lower starting point, right? Which is kind of this slight recovery and then a rejection. Right now, Qs and tech more broadly looks at risk, like heavy. And it's in the process of digesting, but these down moves are coming in with a little bit too much volume for them to be like fully dismissed. And if we double click into like what's going on here, and we look across things like comm services, which is also down, but then we take a look at tech down, there's a really clear trend in terms of what's now driving this. And I want to show you a quick view to help illustrate the point. On this side over here, I still like to look at a metric called net highs and net lows. It looks at two different exchanges. It looks at NASDAQ, which is the purple stuff, and then it looks at the New York Stock Exchange, which is the green stuff. And over on the right-hand side, I was talking about this actually yesterday, but there's a really, really weird divergence going on. I know it's kind of hard to tell, but the darker area within the green is the purple, which is the NASDAQ. It's just kind of underneath, but you can see it when you hover on it like this. The thing that I want to highlight is notice how it was still posting net highs. That means on a given day, there were more companies making highs than lows. But these lines down here are gross, meaning just the total number that are making lows and highs. There was a really, really curious divergence that started literally yesterday. And that divergence is this. Notice how net highs lows was still positive, but there's this massive acceleration in gross lows to the downside to the tune of some of the lowest levels we've seen over the last 6 months and over the last year. That divergence typically precedes movements literally like this. And we straight up talked about it yesterday because, again, down moves like this, they're not exactly not predictable. Perfectly timing stuff, that's where it becomes way more challenging. But very rarely does the market just fall out of bed on its own with zero warning whatsoever. The trick is it might show warnings and then not go down at all. And that's what catches a lot of people off sides that like to sit on the sideline until there's a dip. And then there is no dip, so then there is no trade or investment, and then you're kind of just like sitting on the sidelines as things are moving higher. Typically want to avoid that. Back to the major overview and where I think the interesting story is. There are still several pockets of strength. You can see it in materials, which are still cracking highs. Energy, still cracking highs. Industrials hovering at highs. Real estate just hit 6-month highs. That one, I'm not gonna lie, caught me completely by surprise. I don't know if you guys had a different perception of that. This one shocked the living hell out of me. Then the relationship between staples and discretionary is widening out even more. There's still this continued defensive flow into staples. And Discretionary was holding on for a while, but is now lagging pretty significantly. Breadth is still not terribly negative. So using things like overall breadth indicators, net highs, lows, accumulation, distribution, all that kind of stuff, it's just all bullshit names to get an idea of like how things are moving in mass. And the Cliff Notes version of that is we are not at flashing red signs yet, but the overall weakness to the downside is now expanding. Before, it was mostly relegated within tech. But then we can see financials have been rolling off and just got really, really aggressive to the downside. And for those that don't know, we're in the middle of an earnings season. And a big thing that's happening right now is there's a lot of concern around the pricing of AI and AI's impact on companies and their future potential earnings. A great example is APP. APP is one of these prime examples of a company that absolutely crushed on most metrics. They were expected at $2.89. They came in at $3.24. They overall, their business looks good looking over the last quarter, but there's a lot of concern about AI's impact on a company like this. And an important reminder, the market isn't so concerned about what's happening right now this second. The market is a discounting mechanism. So it's looking out 6, 8, 12 months in the future and trying to forecast what is a reasonable value and then discounting that to the front. That's why you're seeing a lot of tech and specifically a lot of software doing really, really poorly. And I'll give you a quick view of that. If we take a look at a grid, this is just using 6-month performance across industries, and you can find the things that are doing well. And these things are probably not going to come to a surprise to literally anyone. They're the things that you've been hearing about. Things like gold, mining, different kind of precious metals. All of those have been doing quite well. Solar, not gonna lie, kind of surprising. They've had some specific tailwinds, but not necessarily huge. But even within the broader tech sector, we're still seeing some elements of strength. So semis, for example. But if we scroll down to the bottom, software, brokers, software, financial transaction services, these are absolutely performing terribly compared to everything else. I mean, they're down notably. And if we zoom this into a nearer term time frame, you can see that the overall mix at the very bottom will slide around a little bit, but the same tenor exists with familiar names being towards this bottom bucket. So if we double click into software and we just eyeball like what's going on in here, time being, if we sort on 6-month changes, out of the list noted in here, this is within COCO, out of what's noted in here, there's literally 2 names that are positive over the last 6 months. And over the last year, 52 weeks, there's 4 names. If you're looking for weakness, you found it. It is here in spades. As always, the question an investor trader has to ask themselves, what's the fair value of a thing? If you're an investor with a long-term time horizon, these kind of pullbacks, as long as you believe that the fundamentals are still strong enough, they can be pretty interesting buying opportunities. But we all know the adage of catching a falling knife. We really don't know where these things are going to choose to start basing out, which is where my typical approach to stuff like this is to wait until there is some monicum of strength that gives us an indication that that base might be starting to happen. Because right now you have stuff like Neon that's literally 94% off of 52-week highs. Gets 71% off of 52-week highs. Oracle, big companies, 54% off of 52-week highs. A lot of these names are getting absolutely smashed, and the broader AI revolution in trying to understand the impact of AI is here. It's very here, it's very present, and it's making an impact. The last note when we're looking at stuff like this, the cool part from an investor or a trader lens, when there's information dislocation like this is where there's opportunity. And it's because if you listen to APP, the CEO, he was talking about how he feels, of course he's going to say this, but he feels that there's a massive gap between the company's performance and sentiment. The fact that that is even a point of conversation, whether you agree with it or not, doesn't really matter. But just the fact that that's even coming up, it tells us an important factor in terms of how this kind of stuff is being priced in, which is right now, nobody really knows, and they're taking the best possible shots. And when there's this kind of dislocation, this is where you can find things that get punished too far and provide good upside opportunity, and vice versa. You have things that run to the upside and start to offer downside opportunity or continued upside. It all depends on the timeframes that you're trading and your overall expectation of what's going to happen moving forward. My expectations are pretty clear. AI is going to continue to massively disrupt quite literally every single industry on the face of the earth. That is very difficult to price. While that's happening, it is no surprise to see things like volatility kicking up and starting to cluster a little bit higher, which for the volatility traders, you will love that. So the game right now is to pick and choose your shots, figure out what kind of time frames you want to play in, and then look for things that meet interesting ideas within those windows, because there's a million things to take a look at. Right now, for me, it's seeing this disruption across software, which is being absolutely smashed. As always, feel free to comment below with any of your thoughts on this. Enjoy the rest of your week. See you guys later.